Thank you all for joining us today. We are all about community at First Service Residential. As the leading residential property management company in North America, our business is building and managing happy, healthy, and expertly run communities. The spread of COVID-19 is something we take very seriously. During these challenging times, our core values inform the decisions we make, and our unwavering commitment to our associates, clients, communities, and our partners remain true. As we adapt to the current changes and challenges of this pandemic, our goal is to share the best practices that keep your community's best interest in mind. I'd also like to take a moment to share a quick legal disclaimer. This webinar is provided for informational purposes only, and it does not constitute any legal advice being given during this webinar. My name is Jamie George, and I'm the Vice President of Insurance at First Service Financial. I'm happy to be here today, and I have 28 years of commercial insurance experience, specializing in condominium and homeowners associations for the past 12 years. Here at First Service Financial, we strive to bring value to clients by working with our broker partners and carriers to bring the best, broadest coverage for the most competitive rate to our clients. I'm joined today by Norman Henley and Jonathan Henley, Senior Vice President and Vice President, respectively, at Arthur J. Gallagher. Jonathan, can you tell us a little bit about yourself and Arthur J. Gallagher?
Sure, Jamie. Thank you. Again, my name is Jonathan Henley. I've been with Gallagher for 15 years. Gallagher is a large national broker. We're the third largest broker actually in the world. And we're very much a niche-focused broker. We have a number of specialized practice groups, one of which being real estate and hospitality. It's actually one of our largest practice areas. And Norman and I are both members of that practice group focusing on habitational real estate and specifically, as well as which most of which is high-rise condominiums. So we're happy to join you today and try to shed some light on some of the issues related to insurance and risk management regarding COVID-19 and coronavirus.
Wonderful. Thank you so much for being here with us today. And before I go into the agenda, again, I'd just like to repeat that this webinar is for informational purposes only and does not constitute any legal advice. So with that, I'd like to go ahead and jump right into the agenda and some of the things that we'll be going over today. So the things we're going to hit on for you today are going to be association exposure and the common questions you may have. We're going to chat about some risk mitigations and some best practices. We're also going to talk about how the pandemic might be impacting the insurance market. We're going to have a little time and open it up for some questions and answers, which you can hit down in your chat box on the lower right-hand side of your screen. And then we're going to have some resources that we're happy to share with you today that you'll be able to take a look at anytime you'd like. So with that said, we will go ahead and jump right into association exposure and common questions. So Norman, thanks again for joining us today. And let's talk about our buildings and let's talk about our surfaces. And can you tell me, does a contaminated surface, does that constitute property damage? And then I'd like to take it even a step further and ask you, is the carrier going to pay to replace those contaminated surfaces?
Well, thank you, Jamie. Good morning, everyone. You know, as far as property damage is concerned, the insurance companies are going to say that no, that the viruses do not cause property damage. They will contend that the property damage requires some type of repair, replacement, or some type of rebuilding. But you know, the plaintiff's attorneys say virus is like a bacteria, that it does have a material existence and physically can damage tangible property. But of course, we'll talk more about it today, but the next hurdle is the virus, microorganism, or communicable disease exclusions. And so, as it relates to sanitizing, they're probably not, unless there's a sublimit on the policy. You know, fortunately, our main go-to market, AFM, currently does provide a $100,000 sublimit for communicable disease. Unfortunately, it is subject to a $10,000 deductible.
Okay, interesting. So While we're on that subject, Norman, can we move on to discussing maybe lost revenues for a minute? I know that some associations might be experiencing some lost revenues. Do you think those are going to be covered under the business interruption coverage that's included in commercial packages?
Well, Jamie, again, as it stands now, business interruption claims are not being paid because they're saying there's no physical damage. And again, in almost all cases, there's probably a virus exclusion. Now, I would say, fortunately, we are not seeing associations having really significant business interruption losses.
That's fantastic news. Okay, so Norman, let's turn to the pollution policies for a second. I mean, if we happen to have one enforced, that is, do you think there could be any coverage under the pollution policy as standalone related to COVID-19?
Yeah, as you said, in the event that they have one, we're not seeing many associations carrying a pollution policy, but if they do, it may provide coverage for cleanup and bodily injury. And of course, the disease is considered a bodily injury.
Okay, great. Interesting. Thanks, Norman. So let's move on to discussing some liability coverages. Jonathan, can the board be sued for not closing common areas, or maybe better yet, keeping them open during this pandemic? Could the board be liable if they let guests in, or if they don't allow guests in to, say, the pool on a property?
Jamie, yeah, thanks. Certainly there's some very interesting issues that are being raised at this time. Boards are in a very difficult position. Obviously, you want to keep your first and foremost priority is keeping your residents safe and keeping everyone, happy within your community. And it's definitely a fine line between how quickly, especially right now, as we've kind of moved from a shutdown phase in those parts of the country to a gradual reopening. And there's a lot of issues about whether or not, we're going to create liability by either keeping things closed or, on the other hand, opening too quickly and having someone get sick. Our advice really is to err more conservatively. Of course, the worst thing that can happen is somebody could get sick and frankly die of coronavirus, and you certainly don't want that to happen, just either from a moral or a liability standpoint. So we encourage people to be conservative, but at the same time, you do have residents that are partial owners of the common areas, and they have some rights too to be able to basically continue to go about their lives and use some of the building amenities. So there's definitely a big question as to how fast and what can do it. It can be a very difficult decision for boards to make. Really, you have to look at the legal standard. The legal standard is to be held negligent. Typically, is what would a reasonable person do under the same or similar circumstances. So if you're a board member or a manager, what you have to be thinking is are the actions that I'm taking, are they reasonable in light of the circumstances, and would a reasonable board make the same decisions that we're making? If you keep this in mind, a lot of what we would recommend, first of all, certainly is following any state, local, or CDC, guidelines or rules, because if you're violating a state order that's being put out by a state or federal agency, certainly that's going to be considered unreasonable in terms of the reasonable person standard. So we would certainly first and foremost do that. And then the other thing would be to look for any kind of guidance from, what states are currently doing. If they're opening restaurants to 25%, maybe it's a good idea to say, let's open some of our common areas, but let's restrict them to 25% occupancy, and sort of following their lead in that regard.
Okay, that sounds like great advice. So let me take that one step further and let's talk about the spread of the virus for a minute. So, are associations going to have coverage if they're sued with an accusation that they caught the virus from the building or that common area that was just reopened?
Yeah, so there's really two issues here. You've got two policies that can potentially come into play. You've got the general liability policy, which deals with bodily injury and property damage. And then you've got the directors and officers policy that will provide defense and personal liability protection for board members if they make what the policy terms wrongful acts. Now, from our experience, almost all general liability policies, we believe, will cover potential situations where somebody gets sick from coronavirus due to an alleged negligence. Bodily injury is defined as, they call it a physical injury, bodily injury, sickness, or disease. So it doesn't just have to be, sickness is covered under that. So if someone alleges that the board opened too quickly and or allowed let's say, for example, a contractor or too many guests within a building, and therefore didn't create a safe environment and the person caught coronavirus, we feel that should be covered under general liability. On the other hand, there could be allegations made, not that somebody was sick, but that, and we've actually seen this in a number of our properties, where residents allege that their rights to either have guests in their unit or to use common areas that they are paying for and that they partially own, that those rights are being taken away from them wrongfully by board members. And that would typically fall under a directors and officers liability claim. And unfortunately, we're seeing a little bit of a mixed bag from different directors and officers carriers, where some have virus exclusions and others do not. So, there could be some coverage issues on the D&O side. The good news is we feel like the damages from those type of claims would be minimal, particularly in light of the damages from a potential bodily injury claim where somebody alleges that, they caught the virus and, became, either very ill or actually died. Those tend to be a lot more significant damages than just somebody alleging that they couldn't use the pool or couldn't have guests in their unit or something like that. So really, that's the short answer. We expect general liability policies to cover these claims. Directors and officers liability, you have to kind of take a closer look and see, if those are going to respond or not.
Okay, sounds great. Thank you. So Jonathan, what about if we have an employee that's claiming that they contracted the virus at work or in our building? Do you think there's going to be coverage on that side of it under the workers' compensation?
That's a very interesting issue right now. In order for a claim to be compensable under workers' compensation, it has to be considered an occupational disease. Just because somebody catches the flu, for example, at work, typically that is not compensable under workers' compensation because it is not a risk, or it's not a risk that's inherent to their job. It can just be caught anywhere, and their job doesn't pose any specific or special, create any special hazard with regard to that illness. What we're seeing with COVID-19 is it's really going to vary state to state. Some states, such as California, have actually recently passed some rules and regulations that essentially said that there is going to be a presumption that if an employee catches COVID-19, that was caught on the job, and therefore it's going to be compensable under workers' compensation. That presumption is rebuttable, but again, it's going to create a real possibility that that's going to be a compensable workers' compensation claim. Other states haven't necessarily gone that far, but it's going to be interesting to see sort of how these are handled down the road. What we're being told by carriers is that if one of your employees does become ill with COVID-19, to go ahead and turn it in as a workers' compensation claim, and then they'll make a determination at some point as to whether it was, an occupational hazard that created it, and whether or not that it's going to be compensable under workers' comp. Again, I think the theory in California is that you would like to see employees have these benefits because by coming to work during this time or not having the luxury to work from home, they are putting themselves at extra risk. So, it's not a bad thing to say, hey, let's go ahead and have the workers' compensation carriers. I think that's a risk that the insurance industry can handle, and would actually be something that employers would like to see.
Great. Yeah, I agree with you. Okay, so now let's move on and let's chat a little bit about best practices and what we might be able to do to mitigate some of our risk. So, Jonathan, what should our board members be considering as they make their day-to-day decisions during this unprecedented time that we're in?
Well, again, we go back to this reasonable person standard. So, the board needs to basically, they shouldn't have liability as long as they are thoughtfully making decisions deliberately and taking into account what is going on in the current environment as far as how states are reopening, what governments are doing, and making sure they're not violating any state or federal orders and adhering to CDC guidelines. Again, some of the things that need to be considered, you want to look at obviously restricting access, and I'm sure this has already been done for the most part, and we're sort of in a reopening stage now. So how much of this should be reversed? But just things like limiting contractors in the building to only those that are providing essential services within the building, limiting guests to units, restricting common areas, cleaning schedules and how often things are being cleaned and sanitized and increasing those. Just taking reasonable measures to make sure that the building is being kept safe and that people aren't being put in any added harm's way by essentially not putting in precautions and not having reasonable measures in place to limit exposure potentially to the virus. And that's what we're certainly recommending. There's been a number of specific areas that have caused concern. Gyms are a big one. I think for the most part, most buildings have decided to close their gyms and then potentially start gradually reopening those. So again, going back to, can we reopen our gym? Let's do it at 25%, regular cleanings, those kind of things. Those are a big ones. Pools are obviously an issue. Interestingly, I was watched a webinar recently on pools and the whole, apparently the CDC has actually issued an opinion or some guidance that says that in a properly maintained pool, coronavirus cannot be transmitted. That's certainly something that you could rely on in terms of making your decisions, but that shouldn't be really the only basis for that decision. Obviously, people, if they're out on the pool deck and using the pools, there may not be social distancing going on, those kind of things. So these are just all the things that the boards really should and hopefully have been considering during this period. But again, we're almost into a new phase now of, okay, well, how far do we go in terms of starting to reopen and starting to get our buildings back to normal? And again, just, taking your cues from federal and state guidelines as well as the CDC and just, following as best they can.
Okay, great. I was going to say my next question to you was going to be, what should the board be thinking about as the state and local restrictions lifted? But I think you answered that for us. So let's go ahead and move on to claims, if you don't mind, and talk a little bit about what some of these potential claims that we might have out there that it sounds like we may or may not have some coverage for. Norman, what is the best course of action for associations to take if they think they might have one of these potential claims?
Well, Jamie, if you take your outline here, as far as the timeline of events, obviously it's very important to document the date and time of any actual or even, serious suspected events. It's good to document. But then we talk about documentation of the board decisions, and that's exactly what Jonathan was saying, is that we're looking to document meetings, any other correspondence or conversations that the board members are having with management or with the residents. And then, the documentation of, where you're following the guidelines or any other things that, as Jonathan says, is showing or that there's reasonable and prudent decisions being made. As far as cleaning procedures are concerned, we sent out recently, I guess it's been a couple, maybe a month ago now, it seems recently, that 2 white papers on sanitizing. These were white papers put together by Gallagher's Industrial Hygiene Division. And one of the things that we're doing, of course, is overall recommending that the associations use experienced contractors. Many of the janitorial companies and even temp staffing companies are trying to pick up additional work. So they're trying to, move into this type of, cleaning. And you just need to make sure that they are closely if you are using them, that they're closely following EPA guidelines and of course, the manufacturer's directions on how to use those chemicals. As far as reporting procedures, although you will probably want to discuss this with your broker, Gallagher recommends that if you have a claim, that you go ahead and report it. There may be a long line here, so that if you have a claim, go ahead and get it in, and then it's a matter of record at that point by the time they get to it. And then as far as expense tracking is concerned, people have asked me for forms or whatever. Basically, the adjusters are just saying, hey, we just need a spreadsheet. Document any, as far as business interruption claims, if there's loss of income related to the pandemic, or also if you have, extra expenses. Some of those extra expenses can be the cost of cleaning, the purchase of protective supplies, and other, maybe leased equipment that you may use. And then, of course, the loss of income, you can almost look on your financials and see where that income is coming from. And what we see most of the time is rental income or interest income.
Okay, great. Interesting. Okay, so let's move on. And I know we can't see into the future, but we know that there's definitely some changes coming or have already occurred. Jonathan, can you tell us a little bit about the current state of the property and liability insurance markets?
Sure. Unfortunately, heading into this crisis, we were already starting to see substantial market hardening, particularly in the property market. It's been across most lines of insurance, but in property in particular, we've really seen rate increases go up, beginning last year, but really accelerating into this year. We've been in an extended soft market where we had a lot of competition, probably over the last 5 years. We've had a lot of competition enter the property marketplace. Rates have been driven down because of that. And we actually have seen where, over a sustained period of time, people were getting very used to either flat or reductions in their renewals. Unfortunately, beginning about 3 years ago with hurricanes Harvey, Irma, and Maria, the property market started taking some very substantial losses, including wildfires, hail, and again, the named storms, the hurricanes. And because rates have been driven down so low, we were already starting to see sharp increases, anywhere from 15 to 30% of increases in rates heading into the whole coronavirus situation. Unfortunately, now I think coronavirus is just going to exacerbate some of the tough market conditions we were already seeing. And the reason for that is because, number one, the carriers have taken big investment income losses. And that's one of the main ways that insurance carriers make money. Is it's not necessarily through underwriting profit, it's through earning investment income on premium dollars that are sitting there while they're waiting to pay claims. And they've seen those investment returns go way down. But even more importantly, they're going to see a lot of litigation, particularly in the business interruption side, as it pertains to retail, restaurants, all the hospitality. They're going to be taking a lot of claims for business interruption that they're going to end up having to defend their stance that those claims are not compensable under the policy. So we're expecting them to see claim costs go way up due to litigation from coronavirus claims. So we're definitely we're not particularly optimistic from a rate standpoint. And at times like this, it just really becomes very important for your broker to do very solid marketing efforts and to make sure that they are hitting all of the markets to create as much competition as they can to, try to limit any kind of price increases as much as possible. Along with the price increases, we are seeing, and Jamie, I think you've got another question coming up on underwriting, and maybe I'll save that for that, but we are seeing tougher underwriting standards, being implemented by carriers, and we're also seeing deductible increases and more difficult terms and conditions. So all in all, it's becoming a much tougher market, and this is only going to make things worse, in our opinion. But it increases the importance of having a broker who is doing the best potential job in terms of marketing your account in order to get the best deal possible.
Right. And you did read my mind there, Jonathan. My next question was going to be on, just the underwriting guidelines. Are they going to tighten? And is it going to impact our ability to actually even obtain insurance?
Yeah, and we don't anticipate there being any type of crisis in coverage. We think that there will be a sufficient number of markets out there willing to take the risk. But what we are seeing is that some carriers are already deciding to either pull out of certain market segments entirely. For example, habitational, residential, they decide they want to get completely out of those markets. And also, we're seeing companies that just say, we're going to give an X percentage of rate increase, and we feel like that's what we need in order to handle this type of business. And if there's other people that'll beat it, fine. We're willing to go ahead and have those, to lose that business if we can't get the rate that we need to write certain accounts. So we're seeing that as well. One of the things driving this too is also not just from coronavirus, but water damage claims have become a huge issue for condominiums, and one of the things that we are seeing too is that a lot of carriers are pulling out of high-rise condominiums, not necessarily because of coronavirus, but because they're taking a lot of water damage claims, and they're either having to increase deductibles, which we're seeing almost across the board with all carriers, to where we were, before we would see $10,000 or $25,000 deductibles. We're now seeing $50,000 to $100,000 deductibles, and that's even beyond that. But on top of all of this, we're facing, carriers are facing other issues as well in terms of some claim situations they've had previously.
Yeah, I completely agree with you. So, Norman, can I get your thoughts on the market today in regards to carriers? Are they assisting clients with payments and premiums, and maybe, get your thoughts on the validity of quotes that these carriers are issuing? Are they standing behind their quotes? Are they issuing them quickly? Are they taking longer? Are they snatching them back from clients? How's all that working for clients these days?
Yeah, well, as far as trying to help financially, we are seeing, a lot of state mandated requirements, but also along with the state mandates, we're also seeing insurance companies and premium note companies or premium finance companies are being very accommodating. At this point, if there is any type of cash shortage, you'd want to talk to your broker, because there's probably a really good opportunity to get some type of relief. And then as far as the validity of quotes that are already coming out, we have not seen anyone pulling quotes. But one thing that we are seeing very common is they're not releasing quotes, prior to 30 days prior to renewal. And as Jonathan was talking about this market, I guess actually rates have been increasing for the last 9 quarters in a row. So I would expect that has something to do with it. There also the reinsurance as a 4/1, that was the treaty reinsurance renewals, and then there's a 7/1, and so I guess they've probably gotten through most of their 7/1 treaty renewals. So hopefully it will kind of settle down. But as Jonathan said, we are seeing increases, anywhere from 15 to 30%, and with high rises with most of our markets, we're seeing more in the 15% level. There was recently, I'm sure a lot of people saw articles that were in the Wall Street Journal. It was kind of very interesting article that was out about a week ago talking about habitational and how much those rates have gone up. But also, Gallagher puts out their property report every quarter, and they're saying that, pretty much as an average, rates are increasing, 23%.
Oh my goodness. Okay, and then Norm, I have one last question for you before we'll open it up and take some questions. Can you tell us about any projected legislative actions or possibly any legal action you see already taking place or that you see could potentially be taking place in the near future?
Well, you see different things coming out almost daily now. You're seeing the legislative actions in both from a federal and each state. Most experts feel that retroactive changes to the policy, especially as it relates to business interruption, are probably not going to be successful. But, Jonathan alluded to a retroactive change in workers' comp. So, we'll have to see legislatures or legislation is coming out, or being attempted, and we'll just have to see what happens.
Yeah, it'll be interesting every day, I think. It's going to be another new day for us. So let's move on and take some questions from the chat box here, and we're going to do our best to answer them. So I already have them coming in. So my first one is, as a manager, am I covered under the general liability and D&O coverage?
Jonathan, you want to take that one?
Yeah, sure. So under the definition of who is an insured on both D&O policies and general liability policies, a manager is going to come under that definition. So it'll enumerate, it'll say the insured entity is an insured, as well as any directors, officers, employees, and then specifically even your property manager is both on D&O policies, at least the ones we write, are going to be covered under the D&O policy as well as the general liability. So yes, we always make sure that the manager is included as an insured under those policies.
That's wonderful. Great. Okay. And so our next question, one of the residents has threatened to sue me and the association because we are not opening the fitness center. Should this be reported to the insurance company?
Jamie, I'm sorry, threatening to sue because they are not, I'm sorry, not what?
Not opening the fitness center.
Not opening the fitness center, correct. And, I think again, and one of these, and if this is the one situation I recall, where somebody was alleging that they had to do physical therapy, and they were medically required to do physical therapy and needed the weight room in order to accomplish this. We feel like, I guess if the question is, should we allow this person to use it? Again, it comes back to the reasonable person standard, and as long as certain precautions are being taken to, make sure that, if an exception is going to be made, there's a reasonable reason for making that exception. And that, the other thing too is making sure the person understands that they're going to be assuming some risk in doing this. This brings up a good question regarding waivers. I think waivers, a lot of managers and boards want to know if a waiver will be effective in terms of protecting them if they decide to open up certain areas. And I would say from a general standpoint, no. I don't think you ever really want to rely on a waiver to fully protect you. They can be helpful, but oftentimes they're not enforceable. But in a situation like this is probably a key situation where a waiver would come into play, where somebody's alleging that it's medically necessary for them to use it. And you can say, okay, we're going to make an exception for this reason, but we want you to sign a waiver essentially stating that you understand that there's a risk and that we are advising not for you not to use the weight room, but if you insist on using it, you're agreeing to give up, any claims you may have against us in terms of properly, alleging that we didn't properly clean or sanitize the weight room. So I think that's a good example. And again, it all comes back to what is reasonable. But at some point too, people, there's a little bit of an assumption of the risk there, where people know that, they could be exposed if they perform certain activities. And a waiver is a really good way to make it clear, or at least document that person is stating that they understand that they're assuming the risk of doing something that the board, for most people, would say, we're not going to allow.
Okay, so I just want to make sure we get this question answered, though. So if they have threatened to sue the board member in the association, should they be reporting that to the insurance company if they have that threat of being sued?
And I'm sorry, Jamie, that was a perfect segue to waivers. So I went ahead and
No,
took it that direction.
I'm glad you went there. I'm really glad you went there, but
we would say that a threat to sue, typically under directors and officers liability policy, the definition of a claim is a demand for money or damages, including non-monetary relief, and this would fall under non-monetary relief to do so. So yeah, that even though they're only threatening to sue, it's still, they're making a demand that they open the weight room, which is non-monetary relief. To be on the safe side, we would certainly want to put the carrier on notice of the claim and let the carrier make a decision as to whether, that really constitutes a claim or not, but at least they can't deny it later by saying, you had this demand letter and you didn't provide it to us. All D&O policies are claims made, meaning that there's very strict reporting requirements that essentially you have to report the claim under the same policy year in which it's reported to you, or you become aware of the claim. So it's certainly one of those things we would want to make sure that we at least put the carrier on notice whether we considered it a formal claim or not.
Okay, great. Okay, and then Norman, I have another question here coming in. If viruses on property is invisible, how do we tell if the viruses are gone after sanitizing?
That's an interesting question, because I wondered that too. And I was speaking a few minutes ago about the white papers that were sent out, and actually it addressed that in one of those white papers. What they do is they cannot see the viruses, but after a premise has been sanitized, what they will do is they go in with what is called a micrometer, and that micrometer will pick up bacteria and fungus. And so they test for bacteria and fungus, and if they find no bacteria or fungus, they make the assumption that the viruses are not there either.
Oh, that's very interesting. Wow, thank you. Okay, and then I have another one coming in. Norman, is there going to be coverage for virus pandemics in the future?
Well, that's a good question. If there is, it's probably going to be some type of federally mandated backstop. Insurance companies and even the larger brokers are really lobbying Congress right now to set up something very similar to what we have for terrorism, TRIA. And I think that's what we're going to have to see. Something very interesting I saw the other day is one of the largest brokerage firms came out actually before the pandemic with a policy to respond, and it was, especially for hotels and different companies. And this was an exclusive program they put together. They showed it to many, many prospects, and not one of the prospects bought it. So, but obviously now, with what everyone has seen, it's going to be, having protection is going to be very, very important. And I think that's what you will see. I don't think you'll see it from the private sector, but maybe a joint venture of the private sector and the federal government. You'll see a program very similar to TRIA.
Interesting. Okay, and we're getting short on time, but let's try and get just one or two more questions in here. Here is another one I have coming through. I have board members who want to hold a board meeting with social distancing and wearing masks and having 6 people in a large room and open up a Zoom to the community. Do you think this would be acceptable and allowable?
Well,
That's a
Jamie,
Jonathan
I'll take
question.
that one.
Okay.
Yeah,
Jonathan.
I'll take so whether or not it's allowable, really allowable. I mean, if you're talking about from an insurance standpoint, there aren't any exclusions that would say if you did that, we're not going to cover a claim if one of the board members gets sick. I would think, just again, not giving legal advice, but my opinion here is that seems like a pretty reasonable thing to do. You have board members that can make their own decisions and have made their decision that they would like to meet in person and have the residents attend via Zoom. You know, obviously you would want to make sure that all the board members are in agreement and one particular board member doesn't feel pressured in order, that they would have to attend, and then could later come back and say they were coerced into attending the meeting. But as long as all of them are on board, I think that's a perfectly acceptable thing to do. You know, I think it lines up, if as long as you maintain social distancing and do those type of things. What you certainly wouldn't want to do is have a homeowners meeting where all the residents are invited and encouraged to attend. And they could allege that, they either, they felt like they had to attend and were coerced in doing so, or felt like, business was discussed that they were not able to participate in. And as a result, they felt that their right to attend the meeting was violated because they didn't feel comfortable in doing so. That could certainly create a claim. But I think as long as the board members are all okay with it, I think that's perfectly acceptable. To do that. Obviously we encourage people to use video conferencing and Zoom as much as possible just to be on the safe side. But, certainly adults can make their own decisions, and you just want to make sure, again, not one of the board members doesn't have concerns and feels obligated to do so. But I think that would be reasonable.
Okay, great. Thank you. And I'll take one last question. And Jonathan, I think you might have hit on this, but I'm going to go ahead and shoot it off to you because it's being asked. If there is a state order in effect that prevents the opening of a fitness facility and the board elects to open with social distancing and sanitizing procedures in place, is there any additional liability?
I certainly think that's a little bit of a risky scenario. Again, I'm not sure from a legal perspective if opening a private gym technically is violating the order that gyms be closed. But obviously there's a spirit to that order that gyms create, an especially high hazard for transmission of COVID-19. And for that reason, the state has deemed that gyms should be closed. I would certainly seriously consider not going against the spirit of that order, even if technically it's legal to do so, in opening a gym when the state has said that gyms need to be closed. I think you would want to be very cautious on that, because that can certainly be used as evidence that the board was not acting reasonably when they made that decision. And again, everyone needs to know, everyone knows their communities. They know the demographics of their residents. They know, the general preference of residents in the buildings, and, buildings are going to have to tailor their policies for their residents. Not all buildings are the same, but at the same time, certainly creates a presumption of unreasonableness in a way if you're doing something that the state says, should not be done, even if technically it's legal to do so.
Wonderful. Okay, great. Well, I'd like to thank you both, Jonathan and Norman, for being here with us today, for taking your time and giving us all the information you did. And all the board members and all the managers, I'd like to thank you, and I'd like to encourage you to use these resources that are up on the screen for you. There are a vast number of things that would be, I think, of tremendous use to you and your boards, to managers and boards. And again, I thank everyone for joining us today.
Thank you, Jamie. We appreciate it.
Thank you.